Good morning, good afternoon, and good evening, traders from across the globe. Thank you for tuning in to my 2429th edition of Short-Term Trading Live with Oscar. Thanks for tuning in. Remember the risk behind this game. If you're going to trade anything, stocks, ETFs, commodities, you name it, crypto, make sure you know the risk. Put your stops in first and never trade without them. So this video coming at you on a Monday night, Juneteenth Monday holiday evening. This is for trading Monday night through Tuesday when markets reopen once again on 6 p.m. Eastern Monday evening. So Monday through Tuesday this video is for. Traders, we know we have an unfilled gap in the S&P up here. The S&P is down here. Unfilled gap is all the way up here. It is a rare occasion that we leave a gap unfilled, but I am here to tell you, do not fall in love with the upside for several reasons. One, I consider what we're seeing here to be basically a 2-day bear flag right here. 2-day bear flag, and the market breaks the red bar. Boom. I think we've got the same thing right here. There's your pole, and if I can bring this over without messing it up, here's your 2-day flag. So I think it's another 2-day flag. And these are bear flags. And bear flags generally produce the opposite of that arrow. They generally produce this. This is what normally happens. You come out of a bear flag, you have a big drop, right? You did that with the red daily bar, which creates a flagpole. And you should drop from this flag. Now, 2-day flags are, it's not that common. However, the market is dropping, as you can see, very quickly. So it's creating 2-day consolidations, a flag, and then dropping. 2-day consolidations. All right, so what's all this flag voodoo, Oscar? Would you get this nonsense out of here? We don't believe in flags. All right, let's remove the flags. What else do we have? Well, if you just believe in simple support and resistance, how about this then? You've also got the flags and this. Look at this red, look at this red channel, right? Channel. Starts here, hits here, drops, comes back up. Look where we are now, which would also be at the top of one of those 2-day bear flags. That bothers me. That tells me do not fall in love with the upside, Omniacs. Then there is the Nasdaq. When we look at the Nasdaq, check this out. Another same sort of thing going on here. Don't fall in love with the upside, kids. It might go up, maybe it will, but look, you've got the same thing here. See that key resistance? Here, here, and now we're challenging it here, coming out of a 3-day holiday weekend. So what do you get on a holiday week? A reversal. I don't know if there was an actual reversal for this holiday. It's the first time we've ever had it on the calendar, so we have to collect data. But you did go in the opposite direction into Friday and ran into resistance. So one of my Omni day trading rules at the Omni Trading Academy is not to trade on the day back after a 3-day holiday weekend. We just had Saturday, Sunday, Monday, today closed. That's a 3-day holiday weekend. I don't usually trade this Tuesday. I just wanted to put this video out for those who do. If you're going to trade, do not fall in love with the upside of this rally. It may break through the resistance and go, and then we'll deal with that on Tuesday evening for Wednesday's trading. For me, I'm going to stay out. For you, recognize the resistance in the Nasdaq and the S&P, and be cautious out there. Put your stops in first. Join me at livewithoscar.com. Please take these videos and like them and share them and get them around the internet so we get more viewers. And remember, stops are in. Emotions are out. Traders, thank you so much for tuning in. Good luck trading out there if you're willing to trade on Tuesday.